Here's the top dividend stocks to buy in 2024. After researching dozens of dividend stocks for the last 2 months, I made a list of what I think are the top 5 dividend stocks to buy, to me, that offer both security and great wealth building opportunity. If you watch this video to the end, I will give you 2 more dividend stocks that I like and my favorite platform that I use to buy them. This is not financial advice and shouldn't be taken as such. So let's start right now. Here's a quick definition of what dividends are. Dividends are like bonuses that companies give to people who invest in them. When a company makes more money, some of it is extra profit. They have choices about what to do with this profit. They can use it to make the company better, buy other companies, or give it to people who own shares in the company, which are the investors. On this list, all the companies have decided to give some of their profits back to their shareholders, known as dividends. When you have a dividend portfolio, it means you're investing in stocks that regularly pay you money. This can be really nice because it means you're getting paid regularly, especially when times are rough. Companies have an obligation where the first people that they have to pay are you, if you are an investor, or also known as a shareholder of the company. If you want some general tips on what dividend stocks may be more stable than other companies, one will be a company that pays less than 50% of its earnings out in dividends. Also, when a dividend stock offers a high dividend yield, the company will have a harder time maintaining those high payments over a long period of time. If you want to ballpark what is a high dividend yield, check how much it compares to the 10-year treasury yield. There are also 2 categories of dividend stocks that you should know about, which the first is a dividend aristocrat, which is a company that has been increasing its dividend payouts for at least the last 25 years. The other one is called the dividend king, where they have been increasing their dividend payouts for the last 50 years. These are companies that are much more reliable and stable, and you probably have their products in your home. One of the best things are the tax benefits that you get with dividend investing. Here are 2 examples. If you are filing as a single person on your tax return, you will pay nothing in taxes up to $47,025 if that is your only source of income of that year. And if you are filing jointly, you pay nothing in taxes up to $94,025 of dividend income for that year. Warren Buffett, the man who became a billionaire using dividend stocks to help him become more wealthy, has more than half of his stock investing portfolio in just 2 dividend stocks. This is actual passive income because you are doing nothing other than investing your money into the market with some of the best benefits that any investment tool can offer. That's it. So here's the list of the top 5 dividend stocks. The first dividend stock on our list is Realty Income, or O for short. This stock has been paying out a 5.7% return to investors. It hasn't been doing so well lately, but that might be a good sign to buy. People who bought it really like to invest in it because it has been increasing its dividend payout every year for the last 25 years, making it a dividend aristocrat. But there's a downside. Like many similar companies, its shares have dropped about 10% from last year to this day, when this was recorded on February 10th, 2024. That's a bigger drop compared to the overall market, which has gone up by 5.98%. But here's the thing. I believe in real estate, and so should you. Even though the market was surprised by those high rate hikes, I think there's going to be a pleasant surprise for buyers when the rates start to drop again. The experts are predicting that the Fed will cut rates multiple times, either in 2024 or in 2025. This company, Realty Income, owns properties that sell things that people always need, like groceries and medicine. These kind of properties didn't take as big as a hit when online shopping got popular. Realty Income has long leases with its tenants and almost always has its properties filled, which means it keeps making money, even during tough times. That's why it keeps increasing its dividend payments over time. Looking at how much money it's expected to make in 2024 and comparing its current stock price to how much it usually makes, it seems like a good deal. When interest rates start dropping and the value of real estate goes up, along with more people wanting to invest, the stock price could go up a lot more. Plus, it still pays out that 5.7% dividend every month. Next on our list is AT&T with the stock symbol T. Right now, if you want to buy 1 share of AT&T, it will cost you $16.84. They pay out a dividend of 6.59%, and they use about 81.15% of their profits to pay out these dividends. A lot of people like AT&T because they have been increasing their dividend payouts for the last 30 years, and it has been known as a stock that pays a high dividend yield through good and bad times. But they're facing some problems with their streaming services, and they owe a lot of money. Next, let's talk about Exxon Mobile, which the short version of it is XOM. 1 share of Exxon is trading at $101.77. The dividend yield for Exxon Mobile is 3.71%. Energy is something that we use if times are good or bad. We need it to transport our food, products, to travel, to get to work, basically everything. This stock has been increasing its dividend payouts for the last 41 years, securing its status as a dividend aristocrat. Next on the list is PepsiCo, which is shortened to PEP. Right now, 1 share of PepsiCo is trading at $167.67. The dividend yield for PepsiCo is 3.1%. 3.02%. This stock has been paying and increasing its dividend yield payout for the last 51 years, making it the first dividend king on this list. PepsiCo has a strong brand and own many other like Lay's, Quaker, Gatorade, 7-Up, Doritos, Cheetos, and Ruffles. Next, we got Home Depot, which has the stock symbol HD. Home Depot has made investors happy with returns of 88% over the last 5 years. Right now, one share of Home Depot costs about $363.15. They pay a dividend yield of 2.3%, which is better than what most similar companies pay. Home Depot has been increasing its dividend payout for the last 14 years. They're a big company worth about $192 billion. So why is Home Depot doing so well? Because they're the best in the home improvement business. Their main competitor is Lowe's, but Home Depot is way ahead. They have a bigger piece of the market and they make more profit each sale. Before we get to our 2 bonus dividend stocks and my favorite platform that I use to buy them, please subscribe to my YouTube channel if you found value in this video and so you don't miss out on future videos on stocks and finances. So let's do it right now. For our first bonus stock, we got Coca-Cola. We all know and love Coca-Cola because of their drinks, but did you know that they also own other brands like Powerade, Vitamin Water, Smart Water, and Topo Chico? They currently have a dividend yield of 3.09% and it has been increasing its dividend payouts every year for at least 25 years, which makes it another dividend aristocrat in this video. The next bonus stock is JP Chase. It is a stock that we can't expect that it goes up too much per year, but we can count on its dividend. Right now, it pays a 2.4% dividend yield and it pays 4 times a year, so every 3 months. What I really like about JP Chase is that it's the biggest bank in the United States and it has a lot of money, which makes it sustainable. It's worth about $506 billion, making it one of the most valuable companies in the United States. Even though higher interest rates haven't been great for many companies, JP Chase has actually made more money because of them. They've been earning more from the interest rates set by the Federal Reserve last year. And it looks like that's going to keep going up because the Fed has said that they're going to keep rates steady until maybe the end of 2024, maybe even longer. The reason for this is that when a currency has higher interest rates, it is more profitable to buy that currency because it will pay more than others. With some smaller banks having trouble last year, like Silicon Valley Bank, it's really reassuring to have a big, strong bank like JP Chase into your investment portfolio. You already have noticed that all these dividend stocks you already heard of and may use them regularly in your life. By investing in them, you can make it so that not only do you benefit from using them, but you also have them paid you to possibly buy more of their stock, which is called compound interest, which to describe it, I will give you an example. Imagine you have some money, let's say $100, and you decided to put it in a special account. Let's just call it bank account. Now, this bank account is like a piggy bank, but it's bigger and it gives you extra money every year just for keeping your money there. This extra money is called interest. Now, let's talk about compound interest. It's like magic. Here's how it works. You put your $100 in your bank account, and at the end of the year, the bank gives you extra money as interest. Let's say they give you $5. So now you have $105 in your account. Now, here's where the magic starts. In the second year, the bank gives you interest not only on your original $100, but also on the extra $5 that you earned last year. So instead of getting interest on $100, you get interest on $105. Let's say this time they give you $5.25. Now you have $110.25 in your account. In the third year, the bank gives you interest on the $110.25 that you have in your account, not just the original $100. This keeps happening year after year, and each year you earn interest on the money that you already earned as interest on the year before. It's like a snowball rolling down the hill, getting bigger and bigger. So as time goes by, your money grows faster and faster because you're not just earning interest on your original amount, but also on the interest that you already earned. And that's compound interest. It's like planting a money tree that keeps growing and giving you more and more money over time. This is how you become wealthier even quicker, as long as you don't spend your dividend payments. Just keep investing them to buy more shares. Now, I will actually give you 2 of my favorite platforms to buy stocks. My favorite platform to buy stocks is public.com, which lets you buy shares for as much as the full price of the stock or as little as $1 while charging you no fees or commissions. So there's no excuse for you to get started. It also has a social aspect to it where you can chat with like-minded people who are also interested in investing. It is also a safe and regulated platform that you can download and get started right away. Just click the link in the description, and by using my link, you can get a stock that may be worth up to $300, and that will also support my channel as I will get a commission. The next platform that I actually like to use for the retirement account match is Robinhood. They are offering a 1% match on your Roth IRA contributions, which is free money. You don't have to pay for membership, fees, or commissions for this offer. Remember, when you cash out your Roth IRA, when you retire, you take that money out tax-free. This, in my opinion, is the best retirement account for me, as most others will make you pay taxes when you cash out, which we have no idea how much more taxes the government would like to take from us in the future. Could be a lot more. Robinhood is very user-friendly and is known for making it easier for beginners to get started investing. So if you are interested, I also have another referral link for you to sign up that'll also support the channel with a commission. Thank you.